problem I see with swing trading in 2020 is that a lot of people are using strategies that are outdated and don't really work anymore, or they're using overly simplified strategies. They get discouraged, lose money, and then quit forever. If you use these swing trading tips for 2020, you'll know exactly what to look for, and what that really means to you is you'll feel confident going into your positions. The first swing trading strategy that we're going to go over for 2020 is the momentum shift strategy. The pros of this strategy are that it's extremely consistent. Anytime I basically see this pattern setting up, I will go into a long position. The next thing is it predicts big moves. You will see some reversals that are predicted by this. I'm going to show you some real life examples. Now, the one thing with this strategy is that there is a short window of trade entry. That means when you see it setting up, you will have to get in without hesitation. And if you miss it, it's pretty much going to be too late. It happens very quickly and you need to get in very quickly when you see this. So I'm going to go over the actual technicals and then I'll show you some real life recent examples. The RSI is a momentum indicator that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock or other asset. The RSI is displayed as an oscillator. That's a line graph that moves between two extremes and can have a reading from 0 to 100. Typically 70 is overbought and 30 is oversold. But that's just the simplest way to use it. The more advanced way to use it is by looking for a momentum reversal. That means when you see a stock downtrending, however, the RSI, which typically moves in line with the price action, is actually diverging and uptrending while the stock is still downtrending. Now, this predicts major reversals, and we're going to look at some real life examples right now. So here we're looking at TD. You want to draw some lines to get an idea of the slope of the price action, and then we're going to compare that against the slope of the RSI. So we draw a line from here to here and we see it's pretty flat. This little tail here that's stuck down, it didn't actually close at that point. That just means it reached that price, came back up, and then closed where the actual rectangle ends. So that's why we're drawing the line from there. And then we're looking at the low points of the corresponding RSI. Now, as you can see here with these two low points, when you draw a line, it's actually an uptrending slope. It's reaching higher lows. This low is higher than this low. Now that's a divergence because they should be typically flat. They should typically be in line. And you can see as soon as we did hit that higher low in the RSI, which signaled the divergence, this stock did pop up. However, there's still a slight divergence in play and I would still be slightly long on TD. Although I am short, definitely Canadian baking stocks overall. Next, we're looking at Netflix here. Now, this is pretty common in Netflix as it's quite a volatile stock. So we're going to zoom in here and look at some price action and draw our slope. So if you can see, the highs are actually getting higher and higher. So this is a higher high and this is a higher low. But let's look down at the RSI. The highs are getting lower highs, meaning they're being less extreme. And that really signifies a divergence. Look at this uptrending price action with downtrending RSI, which is, right, momentum, right? RSI signals momentum. And if you look at the longer term, we're increasing in price action while momentum has been steadily downtrending. Now, this is a pretty extreme divergence. I would short Netflix right here. Disclaimer, this is just for, entertainment purposes only, but this is a pretty extreme example of a divergence, and I would feel pretty confident actually going in short on Netflix and buying put options. So that's another example of a RSI divergence. Let's look at the next one. One more here as we're looking at Boeing. So you can see before we had this huge downtrending, which yes, of course, was affected by news, but you can also see that it was downtrending slightly before that, and it would have been downtrending anyways based on this RSI divergence. So again, we have a price action, which is reaching higher highs. And then when we go to the RSI down below, the RSI, which essentially indicates momentum, right? Interest in the stock, is downtrending and hitting lower highs. So how can a stock continue to rise when the momentum's dying out, right? You're seeing into the future that it's going to downtrend. And then, of course, we got that big downtrend exacerbated by the very bad news that Boeing had as well. Next strategy we're going to look at is the 50-day bounce. Now, the pros of this strategy is that it's possible to plan. You can actually look at a stock and see when it's heading towards its 50-day EMA and plan to buy there with a stop limit. I do that pretty consistently. The other pro is that it occurs fairly often. If you're watching 5 or 10 stocks regularly, the odds are that one of them is heading to a bounce off the 50-day EMA, a 50-day bounce. The cons are this must be monitored. It's not necessarily a set it and forget it play. You're going to be watching it and seeing when to take your profit, and you're going to want to have a stop loss as well in case it doesn't actually bounce off the 50 and goes past it. The moving average bounce trading strategy uses a short-term time frame and a single exponential moving average and trades the price moving away from, reversing, and then bouncing off the moving average. Now, moving averages smooth the price so that short-term fluctuations are removed and the overall direction is shown. When the price experiences a strong move, it will have a tendency to retrace back to the moving average, but then continue the original move, and it is the bounce that is used by this strategy. Now let's look at a great example of this again with Netflix. So you'll see that we actually got 3 separate bounces off the 50-day EMA. That's that line in red here. And you can see where it drops down fairly drastically to the 50-day EMA and then bounces for a 1 to 2% jump, hits resistance, falls back down, and bounces again. Now this will happen extremely consistently, but I will say that it does take practice. Now you want to see a bit of confirmation before you actually get in, because sometimes it will actually go past through the 50-day EMA and bounce off the 100 or 200-day EMA or even the VWAP, but 50-day is extremely consistent. It's so consistent that at this point, when I see something falling hard towards the 50-day EMA, I'm basically going in very consistently without even a second thought because it just works so well. For swing trading, this still works in 2020. So I hope you learned something new here. Like I was saying in the beginning of the video, a lot of people are using strategies from 5 years ago, just simple range trading and things like that, buying at the dip. So yeah, the reason I made this channel is with actually going through and learning trading myself over about 2 years. I didn't really start getting results till I started learning from more advanced people that actually professionally are financial consultants, hedge fund managers, people like that, and they're trading way differently. And these overly simplified things that a lot of people are teaching don't really work, and it leads to people getting discouraged and just giving up on it. So I really wanted to make a channel that goes in depth and really teaches strategies that I know work. The other thing that this channel does is it goes over trading news for the week. I'll look at Tesla, what's the latest news on that, earnings reports coming out, new IPOs and things like that. And you'll get, not just hype and speculation, but real analysis. So if you want to take trading seriously, subscribe to this, comment and ask me any questions, and I'll see you in the next video.